Alright, yes guys, welcome back to the best channel on YouTube that makes you fucking money. Today we are going to be doing a full trade recap of the trades that I took last week. Currently on a 6-trade winning streak, and I'm not saying that it's going to last. I'm not saying that all we take is winning trades. I'm just saying as of now I'm on a 6-trade win streak, and I'm here to go over the trades that I have taken so I can explain to you guys the ins and outs and the reasoning behind taking the trade. Now this is the trade that I took on Monday the 18th of August. Let's go straight over it, and this trade would be nothing without a real execution that I took myself. So this is the execution of my trade. You can see the 18th entry at 9:51. This is in Central Time because I'm currently in Houston and I'm not in Miami at the moment. I'm actually going to be moving from Houston over to Mexico and doing a bit of time in Mexico. Then I'm going to go hit New York and then hit the Bahamas and hit some tropical shit. Go back to Miami, go see some family in the UK, fly from UK to Dubai by the end of the year and celebrate New Year's either in New York or Dubai. That is the plan, guys. This is the trade that I took on Monday. We took another trade on Wednesday and I missed Thursday because I was on a very important business call. As recently, I've just purchased a new apartment over in Dubai. Gassed about it. First apartment in Dubai, 2 in Miami, but Dubai I'm looking to expand big and take things to the whole nother level. Now, guys, starting on the 15-minute time frame, monitoring NQ and ES. The first thing that we do at 9:30 a.m. is mark out the key levels. So let's get that done. We can see here between 2 a.m. and 5 a.m. the 15-minute high that is presented is going to be this one inside of London. So we have ourselves London highs. So let's mark that out. And now we're going to want to mark out obvious lows in price, which you can see here. So we have ourselves a low at 5:15 a.m. Now this is not London lows. This is just going to be a point of sell side liquidity that we can look to mark out. So let's zoom out a little bit and we're looking at Monday. We can see Friday. So we actually call this either previous day low, but because it's on Friday to Monday, we have the weekend in between. It's not technically previous day, so we can label this as previous session low. So PSH. Okay, so now we've marked out the levels of London sell side previous session low. We can see that we have a high here, which is on Sunday at 9:45. Asia starts at 8 p.m. So this is going to be Asia highs. Okay, so on this day, that's entirely everything that you need to mark out. Whatever you mark out in NQ, make sure to copy that over to ES to ensure that we can potentially look for differences such as an SMT and ensure that the price action is correlated. So let's get that over. Okay, sell side previous session low, which you can see has already been taken on ES. So previous session low has already been taken. And then if we look at London highs, we can see if we copy this over onto ES, we're already starting to see a difference that we have a bearish SMT on NQ at London highs already. So now we want a fast forward price up to 9:40 a.m. and then we get down to determining our bias. Do not determine your bias at the New York Open, because by the time you get to the macro, 70% of the time your bias has already shifted and changed. Because of the volatility at the New York Open, price will tend to draw towards buy side or sell side at the New York Open, potentially creating a Judas swing, and that's going to shift your bias a lot. So let's fast forward price up towards the first day of macro. This video that I'm making today on YouTube is more of a full recap. So we're going and dissecting price so you guys fully understand the ins and outs. So hopefully you're finding value from these type of videos. And this is meant to be PSL, previous session low, not PSH. Was my bad. Right, so a bullish order block is a swing low for price created with a bearish gap and the next candle overlaps, so engulfs the red candle. This would be a bullish order block. So we can mark this out and this would be a bullish order block. If we take the high and then inverse the order block, this is going to be a bearish breaker. If we did not take the high and then we inverse the order block, this is going to be a mitigation block. That's the difference between a mitigation and a breaker, is that a breaker takes the high before inversing the order block or low for bullish and bearish scenarios, and a mitigation doesn't. Let's look at a different type of order block here. This here is not a order block. Price creates a swing low but does not engulf the next candle. Let's look at some other scenarios in price. This here is a bearish order block. Price creates a swing high. This candle overlaps the up close green candle. This would be a bearish order block. If price closes above the bearish order block, because we took the short-term low, this would be a bullish breaker block. As you can see here, another example, we create a swing low, red candle down close, next candle up close, engulfing the previous red candle. This would be a bullish order block. Institutional interest is supposed to be around bullish and bearish order blocks, as we have this swing low and then we have an aggressive move higher where a lot of orders and a lot of volatility has come into price to engulf the previous candle. This is is why it's supposed to be institutional interest around this area here. And when this is inverse, this will turn to a bearish breaker or a bearish mitigation block. In terms of taking the high, this would be a bearish breaker. So let's fast forward price. As you can see here, we create this swing low with the down close candle, this candle up close and engulfs this one. This would be a bullish order block. Price trades into the bullish order block. If that gets inverse because we did not take the high, it would be an example of a mitigation block. Price closes below. This is a mitigation block. It's inverse the order block. Price then creates the bearish gap paired with the mitigation, paired with the breaker block, because we've inversed this order block as well. So we have a breaker and a mitigation paired with the gap, and we've had a sweep of London highs. As far as bias, if we start on the daily time frame and determine our bias, you can clearly see the previous day actually inversed the bullish gap. So we closed below the bullish gap. So the daily draw is going to be towards the next daily low or bullish gap. So the draw on the daily is going to be this bullish gap, as there is no daily low / swing low to target. So the daily is bearish. The 4-hour time frame, let's take a look. As you can see here on the 4-hour time frame, we was trading out of a 4-hour bullish gap. It got inversed. Upon the inverse, the draw would be the next 4-hour low or bullish gap. However, due to the SMT at the low on previous session low, ES already took the low, therefore the draw is going to be neutral on the 4-hour. So let's start to write this down. The daily is bearish. The 4-hour is neutral. Now we're on the hourly time frame. Let's take a look. On the hourly time frame, as you can see here, we are currently trading out of an hourly bearish gap, which price is traded into, and the hourly is going to be bearish towards the next hourly low or bullish gap. So this hourly low here, which you can see I've marked out as sell side, is going to be the draw on the hourly. So the hourly is bearish. Now let's look at the 15 and then the 5, and then we have all of the results that we need. Paying attention to the 15-minute time frame, you can see we're currently trading out of a 15-minute bearish gap, not bullish gap, and the draw out of this bearish gap is going to be the next 15-minute low, which you can see to be located to be 75350, and that's from that point is when the 15 would then go neutral. So we are bearish on the 15, and we do not need to check the 5. As you can see here for price, on a neutral bias, we can delete this off. This is like shooting a gun and not knowing which way the barrel's facing. So this gives us a result of 3 bearish out of 4 results. The 5 could potentially either be neutral, bullish, or bearish, but with 3 out of 5 results already, this is already going to lean towards a bias. So our bias is bearish. Then we look second of all for a sweep of liquidity. Then we've had a sweep of buy side with a bearish bias. Then we look for a shift in market structure, which you can see here on both NQ and ES. So let's mark that out below the previous short-term low, so that would be a market structure shift. And then we look for a fair value gap on both NQ and ES, which we have. Fair value gap on NQ, a fair value gap on ES. And then we look to see, do we have a breaker or a mitigation paired with a gap on either NQ or ES? Does not have to be both. In this case, we have a mitigation block paired with the fair value gap on ES. We have a breaker block and a mitigation block paired with a gap on NQ. Okay, and now we're going to look for an entry inside of macros. So we're going to wait for 9:45, which is the first day of macro, to 10:15. So we've already got the end of macro marked out there. So we're going to look for an entry of this bearish gap. So if ES taps the gap first or NQ taps the gap first, we are going to enter short. Stop placement, this is a breakaway gap. So this candle caused a displacement below the low and it also created a gap. So we can run our stops at the high of this current breakaway gap, and we're going to target the first 1-minute low for a 2-to-1 risk to reward, which you can see to be this low at 836, 753, and we can mark this low out, which is our first 1-minute low for a 2-to-1 risk to reward. So now we need to see, do we get an entry for price? Okay, straight at the start of the macro, as you guys can see here, we get an entry off this candle at 9:45. So I would take this, considering the stops 18 handles, I would take this with 14 contracts on my live account, and I can run a stop loss at the high of the breakaway gap. TP, always 2 points above the point that you're looking to target. So I'm looking to target 753, I'm running at 755. So if price creates equal lows, we are still going to get our order filled at the area of TP. I've seen too many people run their TP at the point of sell side, create equal lows, and not actually get filled. This saves a lot of money by the end of the year. So let's fast forward price. And some of you were thinking in regards to ES. Well, the candle on ES at 9:45 that opened and traded into this gap, ES, yes, had ran higher, but had not closed. So it had not inversed yet. The model was still valid upon entry at 9:45. That's why I took the entry. Now we have an added confluence after the point of entry, after we'd already entered the trade. Now we have a bearish SMT on NQ. And if you take a look at ES on the 15-minute time frame, we have a bearish SMT between unfilled 15-minute imbalances, which ES is now traded into the unfilled 15-minute bearish gap, and gradually after trades into this unfilled 15 as well. So that's an added confluence to the trade already for price. Price then creates a bearish order block, creates this swing high, next candle engulfs, bearish order block. Price potentially will trade back into this green candle and then attempt to draw lower. And then if we take out this first short-term low past 50% of the trade, which you can see, so from TP to break even, And if we take a low past 50% or create a bearish gap in a bearish trade past 50%, that's a point where we go to break even. So it's fast forward price. We've taken out the low, so now we're going to be break even as we take a low past 50%, and then boom, the next candle runs straight to TP. And for those of you that was targeting previous session low, you can see I've seen many people be around a couple ticks from hitting TP. This is why you always run your TP just above by 2 points. Otherwise you're going to end up like this, where you never get filled and you get your trailing stop absolutely destroyed. So this is why you aim for a 2-to-1. You do not aim for these 3-to-1, 4-to-1 risk rewards towards the opposing liquidity. You target the first 1 minute low for a 2-to-1. So now let's dive into the next trade, which I took on Wednesday. I was not around on Thursday, but I will run through that with you guys on TradingView in a second. And on Wednesday, this was the trade that I took. Okay, so taking a look at Wednesday, starting on the 15-minute time frame, let's mark out the key levels. And I just want to jump onto the hourly time frame because this point of sell side is very far to the left. We need to quickly mark this out. So you guys are going to see that we have major points of sell side on the hourly time frame, including this low and this low. So let's mark this out. As you can see, it's already been swept just previously. Sell side liquidity has already been swept, and let's take a look at that on ES as well and see the difference between these lows. So marking out this point of sell side on the hourly time frame, you can see that we do have a huge bullish SMT on the higher time frame between NQ and ES, of NQ taking this low and obviously ES not. So now we're going to drop back to the 15-minute and mark out any highs that we can reference, which you can see we do have one very obvious 15-minute high, and that is going to be about it, marking out on the 15-minute time frame. So we can mark out just this point and mark that out as buy side. Let's take a look at ES and paste that over. Okay, perfect. So on the 15-minute time frame, we've marked out this point of sell side, and we understand there's a higher time frame bullish SMT on ES as NQ took the point of sell side already, and we've marked out this point of buy side as well. So now we're going to determine our bias. So on the daily time frame, as you can see here, we are currently trading inside of a daily bullish gap, and this daily candle, which you're looking at as of now, is still open. So we're going to assume that this daily bullish gap is respected. So the daily is bullish. If we look at the 4-hour time frame, we're currently trading out of a 4-hour bullish gap, and we're going to assume that gets respected. We're also trading out of the lower 4-hour bullish gap. So we're going to assume that gets respected. So the 4-hour is also bullish. If we look at the hourly time frame, we're not in an hourly bearish gap as of now. If we look to the left, you can see that we're currently trading out of this hourly bullish gap, and we are going to assume that gets respected as well. So we currently have a result as the daily is bullish, the 4-hour is bullish, the hourly is bullish. That's already 3 out of 5 results as bullish. So we are going to be looking for longs as we have a bullish bias. Following a bullish bias, we then want to see a sweep of sell side. As of this point on Wednesday, we've already seen multiple sweeps of sell side, including London lows, Asia lows, previous day low, and also a major point of higher time frame sell side. So let's fast forward price on the lower time frame, understanding that we do still have a bullish SMT on ES as NQ took that low. So now we're going to look for a shift in market structure. Okay, so as you can see here, we've just had a shift in market structure. Yes, there's a fair value gap. Upon this gap, price did not displace on either NQ or ES. This here is going to be a bullish order block, and as you can see here, if we mark this out, we have a bearish order block as this candle afterwards engulfed this one and create the swing high. So we have a bearish order block. Now if that gets inversed after taking the low, this is going to be a bullish breaker, and we can mark that out on ES as well. So the macro on the second day of macro is between 10:45 and 11:15. So we've just had a shift in market structure. However, as of now, there is no mitigation block, no breaker block paired with a fair value gap if we was to see a fair value gap be created as of now. So let's fast forward price. Okay, so no gap was created. We're going to look for a further shift in market structure above this previous high. Okay, as you can see here, we have a shift in market structure, but still nothing is paired with this gap. So we're going to fast forward price. As you can see here, price closes above the bearish order block, and now this is going to shift into a bullish breaker. So now we have a bullish breaker, which is clearly paired with this breakaway fair value gap, which displaced above these short-term highs. So we can mark this fair value gap, which is paired with the breaker, and we are going to be looking for an entry off this fair value gap. So C, is price going to give us an entry off the first presented fair value gap? Okay, price does not give an entry. We are now going to look for an entry off this fair value gap here, and this is going to be our final point of entry. Price does not give an entry as of now, and now we can see we've created a swing low and a bullish order block. So we already have a shift in market structure. Price has not met the objective on either NQES, which is going to be this first 1 minute swing high, which is more prominent on the 5 and 15 minute time frame. As you can see here, we have a shift in market structure above this previous short-term high and a bullish order block resting below. So I'm looking for an entry on this first presented fair value gap, and I'm going to run my stop placement at the low, which was created of this swing low, which created that bullish order block. I'm targeting the first 1 minute high for a 2-to-1 risk to reward. So see whether we get an entry. Okay, price gives an entry. We're risking 15 points. So my average position size is 12 minis on a 30 handle stop. So this would be taken with 24 contracts. Stop placement at the low, TP just below the high. So we're aiming for 157. It'll be at 155. So let's fast forward price. Okay, we take out that first short-term high. So as of now, we can trail our stops to a short-term low once the next candle closes. Okay, so the next candle closes, you'd actually trail your stops to the short-term low. And then as you can see here, ES has taken the objective. So I closed out of this trade prematurely on NQ, securing a 1.4 to 1 risk to reward. If ES takes the objective before NQ, make sure that you close out of the trade prematurely, as this is now an SMT going against your trade and ES has already met the objective. So that was the trade that I took on Wednesday, and that was the trade that I took on Monday. Now I was on a call on Thursday and I fully back tested the price action on Thursday to get a complete understanding if I was to miss out on any trades, which there was a very clean opportunity inside of the lunch macro. So for those of you that are monitoring Thursday, I'm going to quickly backtest on Thursday so you guys get a complete understanding of what went down on Thursday. Okay, so after pulling up the price action on Thursday, inside of the first day in macro, there was absolutely no opportunities that you could have capitalized off or even taken a loss on. Inside of the second day in macro, some people I did see slip up on their bias. Yes, we do have a sweep of liquidity, and yes, we do have a shift in market structure and a bearish breaker, which will be paired with this value gap that gets created now. So upon entry, I want you guys to take a look at the bias. On the 5 minute time frame, if we monitor, the 5 minute is bullish out of this bullish gap. If we look at the 15 minute time frame, we are bullish out of the 15 minute bullish gap. If we look at the hourly time frame, we are bearish out of the hourly bearish gap to the left, which you can see there. We're currently not in an hourly bullish gap, so the hourly is bearish. If we look at the 4 hour time frame, you're going to see this gap has already been inversed, so we're not going to take this as bearish. And if we look to the left, we're currently trading out of a 4 hour bullish gap, so the draw on the 4 hour is going to be bullish towards the next high or bearish gap. So we have 3 bullish results, which is not a bearish bias. Therefore, you're not going to be taking shorts here, and you're going to sit through this and wait for an actual valid opportunity. So if we just monitor price, you can see those that took that short, we have a bullish bias, price continues higher. Price then displaces lower again, which you can see here, tricking other ICT traders to think this is another potential short. Take a look at the bias once again. The 5 is still bullish. We just inversed the 5 minute bearish gap and also respecting bullish fair value gaps as well. On the 15 minute time frame, the 15 is bullish. This candle is showing on TradingView end of candle close. We are currently here trading for price inside the 15 minute bullish gap. The hourly is still bearish and the 4 hour is still bullish. So that's 3 results as bullish. Therefore, we have a bullish bias. So there's no trade to be taken here. As you can see, we've just ran to the end of the second day of macros. So now let's fast forward to the lunch macro. Okay, so looking at the start of the lunch macro, let's mark out the points of minor buy side and sell side liquidity. This is an obvious high. Let's take a look at ES. We have an obvious low that we'd want to mark out on NQ because I've already marked this out on ES. And then we also have an obvious point of minor buy side liquidity, minor buy side. And also, as you can see as of now, ES has already swept buy side, NQ hasn't. Bearish SMT on NQ. Now let's take a look at the bias, which is the main thing. So on the 5 minute time frame, the previous 5 minute bullish gaps have already been inversed. Now if we take a look as far as bearish, we are currently trading out of a 5 minute bearish gap. So the 5 minute is bearish towards the next bullish gap or low. So the low is going to be the draw. So the 5 minute is bearish. Let's have a look at the 15. The 15 inside of the second day of macro inverse the 15 minute bullish gap. Therefore, this is going to be bearish on the 15 minute time frame after inversing the bullish gap towards the next 15 minute low or bullish gap. Right now, this candle is showing you the end of candle close on the 15. We're currently trading up here amongst the displacement that we're seeing for price. So the draw on the 15 is going to be this low that we marked out on the 1 minute time frame. The hourly is still bearish, trading out of the hourly bearish gap. So that is 3 bearish results out of 5. So we have a bearish bias. As you can see here, that's where the end of 15 closes, which kind of gives away the end result for this trade. We have a shift in market structure below the low, a bullish order block, but we took out the high. So this is a bearish breaker block, so we can mark this out. We then have to see a bearish gap on both NQ and ES. So let's fast forward price. So now we can see we have a shift in market structure on both NQ and ES, a bearish breaker paired with a gap, a fair value gap on both NQ and ES as well. So fair value gap, bearish breaker, and now we're going to look for an entry and also a bearish SMT only as a confluence. The ICT space likes to really glamorize an SMT, but it's only a confluence. So following a bearish bias, then we had a sweep of liquidity. We have a shift in market structure, a bearish breaker paired with a gap on both NQ and ES, a displacement on NQ and ES, and now we're going to look for an entry. As you can see here, ES trades up into the fair value gap, NQ doesn't, so this is going to be your premature entry on NQ, so you're going to enter straight away. So in regards to our stop placement, we can run it at the high of this candle here because we have a breakaway gap. We can run at the high, but I just want to protect my position above this bearish gap as well. So you can run at the high of this bearish gap for 18.5 points. We are going to target the first 1 minute low for a 2-to-1, which is going to be this low, as you can see here. So you're getting a 2.7 risk to reward. Each 50k account off the bat, you'd risk $300 per trade, aiming for 600 on a 2-to-1. This is 2.7, so 2.7 times 300. That's going to give you a result of around $750 to $800 on this trade. So we've caught an entry, and now let's see how we monitor and manage our risk. Okay, so as you can see here, price creates a second breakaway gap as price displaced below this second low and created a gap simultaneously. So now we can trail our stops, considering that we have a gap past 50% of the trade. We can run our stop placement at the high of the breakaway gap. So that is our stop trailed. And then as you can see there, price runs all the way to TP. Absolutely lovely week, and same with last week as well. We will see what we get next week, same approach, and we just continue to follow the model. If you guys have found value out of this video, very straight to the point, no PowerPoints inside of this video, straight education and breaking down the charts. If you like this style of content, just drop a like on this video to share it out to people that need it the most, because there's so many people blowing accounts and getting the wrong information from the wrong type of people on social media. And I do not plan on being on social media for much longer, and I'm trying to put my final touches out there so you guys actually do have the right type of guidance from the right person and avoid all of the noise. Focus on yourself, everything will come to you. Do not rush this process, and I promise you, you will get everything that you desire with time. For future suggestions on this channel, make sure to drop a comment on this video, as I do pay attention to majority of the comments that do get posted on each video on this channel. So if you do have a solid suggestion, make sure to drop it in the comments below, and I will include it inside of the next video. I hope you do have a great rest of your day, a great rest of your weekend, and I will speak to you guys shortly. Take it easy.